Hello guys. So till now we have gone through ratio analysis, balance sheet and profit and loss statement. Now we will see how the cash flow statement looks like. Now this is the cash flow statement as seen in the Skinner website. So this is again a year wise 24-23 in a reverse sequence. So first row is the cash from operating activities. So this is basically nothing but whatever cash is generated from operating of the business, running of the business, cash collected. This is as a this called as a cash from operating activities. So what are the constituents of this? So firstly, the profit from operations, 825 crore. Now there were some receivables, that is minus, then inventory is reduced, and there were some payables. So this is added. Okay, receivables are reduced and payables are added. Okay, just remember this. So this should be positive for any company. Okay, this is always positive. This cannot be a negative figure. Just remember this. If it is negative, then there is some issue with the company. Okay, now let's see this is called CFO, cash from operating activity. Second is the CFI, cash from investing activity. So what does it entail? This is generally a negative figure because company once it gets the cash, it should invest also. So this is fixed asset purchased. It is very good that it is purchasing, so giving out money, negative entry. Fixed assets sold. If any company is in distress, this figure will rise and the ultimate figure of investing will come as positive. So it is not a good sign if these fixed assets sold are more than the assets purchased. Now then some investment purchase, they must have bought some bonds or something or shares of other company. Investment sold, this may be profit booking. These are all small amounts, so we should not bother much. Then interest received. Okay, they must have given some money on maybe credit or something, then interest received. This is now you can see invest in subsidiaries. So they must have invested some amount of money from the main business to the subsidiaries. Then investment in group companies, you can see some investment and other investing items. So see this total comes out as a cash from investing activity. So this figure ideally should be negative. So you can see all years it is negative except this March 2022. Now next come on to the financial activity, CFF, cash from financial activity. As you can see, uh, proceed from shares. Now finance means it is doing some financing of the money. So proceed from shares. This company must have sold some shares of maybe own company or maybe other company. Proceed from borrowings. When they borrow money, it comes as a positive. Repayment of borrowing comes as a negative, and this is a very good sign. That is why I say this CFF should be negative. Why? Because once the company keeps paying their borrowings, this major chunk of money will come as a negative figure, and this will make the ultimate figure as negative. Again, interest paid in a financial term. So again, this is company is regularly paying in all the interest obligations. Dividend paid, it again comes as a negative. So it is again a good sign. So this dividend paid, interest paid, and borrowing repayment, these are the major chunk of the cash from financial activities, and that is why this overall terms comes as a minus. Then some liabilities it has been paid off and other financial items. So this is how the cash from financial activities, you can see it should be negative. So based on the CFO, the equation is CFO minus CFI minus CFF. The overall figure comes as a net cash flow. So don't get confused with the net cash flow with the free cash flow. Free cash flow is a uh, different term and different formula is applied, whereas net cash flow is just a cash flow figure in a cash flow statement. So as of now, we will just restrict our discussion with this cash flow only, net cash flow. I will cover the free cash flow along with the formula in the subsequent videos. Okay. So this may be positive, this may be negative, but one must remember this should be positive always, this should be negative always, and this should be negative always. Because if company is getting cash from operating activities, then it must invest and finance uh, in something. And that is why if the CFI and CFF are more than the CFO, then this figure will come as a negative figure. But if it is just below this amount, then it will come as a positive. So you cannot judge a company like it is negative, so it is bad. Again, it is positive, it is good. This is positive. You cannot. It is only the free cash flow will tell you how the company is good or bad. So as of now, we will just restrict it to the cash flow statement. So I hope you understand this much. We will cover the next topics in the upcoming videos. Thank you.